Hi, welcome to Numerix Video Blog. I'm your host, Jim Jockle. Joining me today from Sweden, Johan Stromberg. Welcome.
Thank you.
Johan heads up the Numerix Swedish operations, servicing the Nordics, and is also head of the Swedish chapter of GARP. And you're here this week with us here in New York City for the annual Global GARP conference. Tell us thematically, what have you been hearing over the past few days?
This is a big conference in New York, so risk managers from all over the world is coming and joining, talking about the next challenges or the current challenges for risk management. What we've seen is we've talked a lot about regulatory challenges, and it's not going to disappear. It's not going to be less. It's going to be more. That's the big theme, I would say. And that refers to what we do in the complex derivatives space and how we can help the customers. So,
this morning, Denny, you did a breakfast briefing around the concepts of profitability in OTC derivatives and managing. And one of the elements that he suggested was the risk manager of tomorrow is perhaps a different skill set than the risk manager of today. Tell us a little bit about how the role within an institution is changing and how GARP is supporting the evolution of the skill sets of individuals in risk.
Well, there are many different challenges. Right now, what Danny was talking about is calculating counterparty risk, that it has become much more complex. Even pricing simple derivative trades, when you take into account the counterparty risk, it becomes very complex. And a risk manager of today and of tomorrow will have to have a more quantitative skill set. It might be that you need to hire more quantitative risk managers to do the job. So that's one part of it. But you also see IT changes. That's one of the risk challenges of tomorrow is handling cyber attacks, handling the risk if the mailbox of your CEO gets into the wrong hands, what happens then? So it's very complex. I think also a company like Numerix, we do very well in our space, and we can contribute in our space. We also have to be humble and understand that the risk manager, the CRO of today, has a lot of different things to think about, and it's operational risk, and it's credit risk, and it's IT security. It's a big plate.
So
you have to.
More importantly, everything coming together and having that single view of risk in terms of rather than not running around and trying to go to 40 different people putting it all together is really kind of critical to empower the risk manager of the future. Yeah,
definitely. Yeah.
So one of the other ones, while I have you here in New York City, want to talk about is really the Nordics have been an explosive growth over the past few years as it relates to OTC derivatives, and clearly impacted by regulation, but in many ways the banks themselves are becoming safe havens for a lot of other EMEA countries. Tell us a little bit about that growth that you're experiencing and some of the trends in terms of what we can expect over the next 6 to 18 months in OTC.
So what we have in the Nordics is, right, like you say, it's a fairly stable. We're doing relatively well in Europe and in the world, which means that the banks have a unique position to take market share, to expand their business. It's becoming a lot more complex, more costly to manage the derivatives books. So you will need tools. You will need tools to be able to calculate the profitability of your trades, of your business. So you will see some businesses shut down. That's happening in the Nordics. Some proprietary trading has been shut down. CVA desks are popping up. And what we see and what is the challenge and opportunity for the Nordic banks, as I see it, is to take the opportunity that you have a relatively stable market, you're making profits, and if you make the right investments, you can actually gain market share in Europe and the rest of the world. And if we come back to CVA calculations, if you can have a CVA desk that can trade and know that you're profitable and can calculate that fast, so you win more requests for quotes. That's a good opportunity for Nordic banks.
Another thing which I know you and I have talked about over the past year has also been around the model validation and the infrastructures that are being put in place. Perhaps you could tell us a little bit more about why is model validation so important right now with the Nordic banks?
Well, first of all, it's to meet regulatory requirements. Once again, you have to prove that your models are valid, that you don't have model risk in the bank. So you seek to reduce that. You have several front office systems. You try to price, you try to manage your risks, but you have different models, different systems doing the same calculations, and you can't really be sure if you're actually hedging your risks. So yes, that's why it's becoming more important. Yeah.
So Johan, thank you so much for the quick update on GARP and in the Nordics, and I hope you'll join us again.
Yeah.
And please feel free to reach out, especially if you're in the Nordics region, about GARP and the events that are being brought to market in the local chapters, and connect with Johan on LinkedIn. I know you're pretty active out there in terms of keeping individuals up to date on different issues. So,
yeah.
And again, please always join the conversation. Follow us on Twitter at NX Analytics or on our blog. We want to hear from you. We want to hear the topics and talk about the things you want to hear about. Thank you very much, and have a good day.
Thanks.